I wanted to hop in here real quick before I start the video. I made it like 17 minutes. I know it was supposed to be like 10 or 12, but right, we had a good point in here where I had to flip my bias and show that I was wrong, right? And then understand, right, when, you could catch the obvious deliveries, right, and maybe miss like this Tuesday where we came into a Monday low a week and could expect, right, an expansion past the high, right, and one more even peep above the high. And you guys will see in the back testing session, right, where it happens, and how you're able to keep yourself protected when you're able to, be wrong and then flip and be able to still catch, the move that you're, wanting to move or catch, right, with what key highs, should be expanded past, right, and what key highs, like such as, right, this example where it should turtle soup this high if we are expecting lower, but, right, we expand past the high. So then it turns into, hey, we have an in-wog and this is probably going to be a classic buy week. Go ahead and let y'all get into the video and I'll, leave it here. How's everybody doing? Welcome back to another short but sweet video this week. Like I said, we've been trying to keep it under 10, 11, 12 minutes and, pump out just 5 short ones this week. And next week, we're going to get into hour, 2 hour long videos and really dig in deep to certain points and really, like I said, just dig deep into them and really get to, understand some of these models and what we're looking at a bit deeper. Today, we're going to be putting out a video that's been highly requested, and it's, right, how do you find your daily bias with your draw on liquidity for the day? Obviously, there is a lot more put into it than just what you see on screen. And I'll also cover, right, a simple, candle closure daily model to have in the back of your head that can go for the weekly. For the monthly, it doesn't, matter that much because it's, a monthly candle, right? If we close, above the previous month, obviously we're probably going to have, obvious liquidity to the high of the month. We're going to be looking for, has a high time frame key level been hit? Market structure, and along with previous swing highs and lows. News. Is there a high time frame S&T? We're going to be looking at the previous day's close very, very closely. I guess I should have used a different word, but going to be seeing if we're going against or through high resistance or low resistance liquidity. We're going to be order probing as well as order pairing. We want to use our market maker models and see if we're in a sell or a buy model, and as well as if we're above or below weekly and daily open. And our true open, not our like candle opens. Well, it depends. Like, obviously our like, midnight open. We're going to be also looking at our weekly range with our profile into where the high and low is put in. Coming down, we have a very good example with multiple days coming in with our first day. We don't have any previous days, so we wait. We see a wick and a close back within the range, which can show indecision. Wow. It can show indecision. If we are delivering in a bearish market, right, this wick out of the range, closure back within the range, could show bearishness. Obviously, having that candle in front of us, it's very easy to see, right, that we do deliver bearishly, but we also sweep a candle low, and we don't have anything to the left to see if we're delivering higher or lower. We do close below, so we would anticipate the previous day close to be attacked, right? But what if this is a Monday and this is a Friday, right? So it would make sense for Tuesday to take out that liquidity to then deliver lower. That's where you want to keep those profiles in mind and not just get attached to the close of the candle, right? We closed below the previous, but, right, we didn't go ahead and attack that low liquidity in the next candle. And that's, right, because of, the reason we shown. We come in and wick in turtle soup, right? And that's why I say this could be an easily a Friday candle, right, with your previous week high or something like that, into like, your Tuesday, right, down here, right, to where we then, have a retracement, right, sweep that low, that high, right, then deliver lower. With that sweep, right, and closure back within the range, you can anticipate we've taken range high, so we're going to take range low. With that next candle, right, we close below, forming an order block, which we'll see later here. Coming in, right, close below, and have a very easy draw with the order block being made, right, to our previous day low, and we deliver past it and close below. We don't know what day and where we are in price to the left with our market structure, so we can't just rely on the close. We see that we have a long wick, which could act as a rejection block and deliver us right to our range high. We do that, have a indecision candle that right reacts off the PD array, which this candle could be reacting off another PD array. We then right move higher and close back within the range. And you can anticipate right our next previous day candle is our draw on liquidity. We're gonna hop on the chart here. After I'm gonna go over these two candles here, and then hop on the chart and just go over some simple draws on liquidities for the day. Right, like we said, once we close above, right, it makes sense how should return to range high. We close above, draw to the high. Right, we see that we react bearishly to our PD array, right, close above, right, but we don't marry that bias, right, because, right, we wicked and reacted bearishly. We react to the wick to the right, close back within the range, and we can anticipate, right, that low into the low resistance can at least attack this fair value gap. You see we inverse it, which I don't take, but it does show order flow on true inversions, and we see that we then, right, take out our previous candle low and close below, right, and it makes sense for us to keep delivering lower, right, we form the breaker and leave a breakaway, and continue lowering, or delivering lower with fair value gap here, fair value gap here. Let's hop onto the chart and show some, I guess, lives just going, back and forth through daily, through days of the week. Alrighty, so coming on the chart, we're coming back to a previous week, like somewhere in 23, and as you can see here, right, clicked on and showed you guys, right, I'm on ES, and I only have 2 tabs open, 2 screens is all I got. So, obviously I had to see a little bit of where we were to, to come back, but, right, I chose somewhere where I noticed we would obviously deliver from a weekly PD array, right, in a premium, finishing out this buy model, and maybe then delivering, right, from the weekly, we see, right, the green candle into 50% of the range, and then us sweeping that weekly high, and then delivering lower. We see we're coming into Monday into Tuesday, right, with Wednesday being that classic sell day. I can guarantee this low will be taken out. Because, right, we're delivering from the weekly PD array here, right, we're coming back in to a discount of the range into OTE, failing to close above, generating more liquidity here for later on. But in this moment, right, with that being our anticipated failure swing, delivering us lower with some type of order block, and you see the volume imbalance as well here. We'll get to the next candle on a Thursday. We see it takes out the previous day low and comes in with the close of a volume imbalance. With just that volume imbalance there, right, and more liquidity generated below, right, you can see, oops, back that out a little bit, come to the weekly chart, and we do see, right, we are delivering from a technical unicorn model, right, but we do have failure swings into equal low resistance here. So we'll keep this on our chart, go back into the daily time frame, right, and honestly, unless Friday gave us an obvious draw to this low, I don't think I would trade it. We see we came in to the fair value gap here, and we did deliver the previous day low, right, but like I said, we did open high, low close, but we did hit our draw, right? You just would have had to have been wary of that. Maybe coming into, I don't know, let's go see. Coming into, yeah, London into open. So I maybe probably would have caught that if like I was open, but it probably, I would have got a stop break even there. Coming into the PM session, PM day that day. Alrighty, well, we'll go back into the daily chart. Come into Monday, right? That previous week low is so close there that it'll probably open on Monday. And go ahead and take it. Creating equal lows, very beautiful. We'll probably engineer liquidity, right? Oops, sorry there. Probably engineer liquidity, right, for a later on date. From us reacting to this breaker here, though, you could say that there will be, right, liquidity above this high, right? But on the, well, I hate that it shows that. Right, on the weekly, right, we do have our order block form, right, and, this high does not need to be ran, right? If price delivers efficiently, right, we should react, right, to this area in price with aligning with the fair value gap, protecting this high. So we'll see what Monday does. If Monday accumulates in the range, right, and we see Tuesday kind of chop around, sweep that high, right, and then deliver lower, right, I could see that. We'll see what, technically I can't see what, Tuesday or London does, but we should eventually end up drawing to these equal lows. I want to say this is protected, right, but we can, right, maybe peep over this. I don't expect us to run any higher, though, right, and I don't expect us to especially, right, we can deliver from the order block, right, but this order block shouldn't be hit with this breaker / order block here. Right, we deliver right to previous day high in the Tuesday, right, that would probably right into London. Let's take a look. Friday, Tuesday at 2 a.m., 6. It did squeak above it there, and then we delivered high or lower, right? So honestly, with that being our high, that could be the high of the week, right? Coming into attacking the previous day low. Even though we didn't close below, right, we have understood higher time frame where we're delivering from and where we're delivering to, trying to attack the low resistance liquidity, not in, attacking the high resistance liquidity above. We'll go one more bar. We attack that previous day low, right, to that classic Wednesday sell, which should be into a classic Thursday. We do sweep that previous day low. Let's see if we went for it first. 6. Well, it's one of those days where it opened, swept the high, and then delivered lower. Oh man, that would have been a beautiful morning candle, right? Because right, you have that liquidity below, right, and you come into just a Asian right range. How does it say 610? Yeah, 610 into a range, and you don't really get any movement out of London. It stays with the inside of your inside candle here. Right, in the higher time frame range here, you just sweep the range high, deliver lower, with an accumulation, manipulation, distribution of your overnight session. We come in to the Friday. Oh, well, right, like I said, we did have that draw lower, right, attacking the low resistance. I forgot to say the previous day low, like right before, but it's all right. We'll come into Monday, where Monday is one of those days where it could form an N-log and continue going lower. Right, we did not do that, but we did take out the previous day low. So we should go ahead and continue taking out that previous day high. We do, and close back within the range, put in a Tuesday high of weekend. Right, and I don't want to swap to the weekly, but you guys have seen that. So we should go ahead and chase that low, perfect, into a Wednesday. Right, we should close somewhere, or not close, but at least tack somewhere down there. Perfect. And then you see, right, price really start to spool, attack these lows. Right, now you have these equal lows down here. The weekly draw, in my opinion, has not been met, right? Because, this is a very small week. Well, I might just be zoomed out a little bit. Oh, okay. So that is a good week. into Thursday, which, right, this is a very big expansion week. We probably do have more liquidity below. Right, I would just like to, see a little bit more intraday what we're looking at. But we'll go ahead and say that we do have that liquidity resting below. And even if we TGIF, we should take it out. Perfect. And like I said, the weekly draw has not been hit, so no TGIF. And you always have to have your if then to keep yourself safe. And this is a beautiful market maker model here, so we should, go ahead and continue to take out the lows, right? We come into Monday, Tuesday high week, where it closes, we expect within the range, doesn't attack previous day low, and we should see, we do see, right, some type of bullish reaction here, with a classic Wednesday buy not taking out the Tuesday low, having a Monday low of week, right, following everything, right. If this low didn't have to be swept, right, we're going to go ahead and continue bullish past this high, using this as a key high. So if we do close above, which we don't, right, and what do we know about our key highs? If we break past them and expand, we should expect higher. But if we, right, close and move back within them, right, we expect our turtle soup. So now we're going to attack lower, which we do on the next day. Oh, that was Friday. Oops, sorry about that. And we're also, right, aren't looking at news. If we would have had our news up and seen, right, what that Thursday was, we could have had an even better understanding, right, of why we, needed to run higher to then run lower. We do have our, close above the previous day, and it also is a Monday, so we'll just go ahead and say that we should attack higher. Ooh, and we went ahead and ran past the high. So we are showing bullish price action now. And, I will go ahead and say that, right, Wednesday will probably be a classic buy day, continuing from the Monday. Bam, and then probably another one. Bam, and honestly, right, you have met this high, but you have no weekly draw met, because that's probably just an order block. One more, and the high gets hit, and it shows, right, how many times we can do this over and over again, and show consistency doing the same thing over, right, using the same narrative of when, where, and why. If you enjoyed it, you can go ahead and give it a like, right? Subscribe, join the Discord as well for free, and I'll see you on the next one.